Oh, I think that Tesla is a great company. It's dominating.
Revenue much better than expected at $17.72 billion. The street was expecting $16.57 billion.
They have unlimited demand so far, 6 months wait times for all cars. And competition is honestly nowhere to be seen.
How quickly can the rest of the auto sector bring online enough EVs that it will seriously dent Tesla's market share?
I don't think they're gonna catch up.
The demand story for EVs is hitting the next stage, and I think Tesla further flexing its muscles.
Tesla is growing deliveries at 5x faster than the overall auto industry. Their profitability on a gross margin per vehicle basis is more than 4x greater than the auto industry. There's a sense of deja vu in the conversation. It seems like every quarter we hear about Tesla beating numbers, margins going up. I mean, these are huge numbers, and they're talking about huge numbers on top of huge numbers.
But I mean, he's really just talking about, look, I want to produce the most cars possible. He's a remarkable man. He's remarkable.
Wall Street stock analysts are losing their mind after Tesla's epic Q4 and full year 2021 earnings results and earnings call. Many in the mainstream finance media continue to be completely confused and baffled about this company. And in a recurring theme, it appears once again that 99% of people have no idea what they just heard on Tesla's earnings call. The implications have not yet sunk in. Overall, most folks seem so laser focused on Tesla's stunning results and crazy growth, they're failing to understand the true implications of the earnings call. I'll discuss those in this video, so let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
What I see is a company manufacturing cars the way other people in the world manufacture chips, with very advanced factories, very efficient factories. They have unlimited demand so far, 6 months wait times for all cars. And competition is honestly nowhere to be seen. Everybody is announcing electric cars. Some of them look very good and should be doing very well in the market, but nobody is in a position to ramp volumes in a way that could, overshadow the very rapid growth of Tesla. And so the reason why I'm still very positive about the stock today, Tesla is very well set to grow at least 50% its production this year. Mm-hmm. And so revenues will grow faster than that because Tesla is forced to increase prices to push back on demand. And margins will continue to expand.
Pierre totally gets it. Tesla really are manufacturing cars more like chips in a new, efficient way like no other company. There is literally unlimited demand. Competition is nowhere to be seen. In fact, it still hasn't moved out of its mum's basement. And yes, Tesla is being forced to raise prices and make even more money just to manage demand. So, in short, is that all?
How quickly can the rest of the auto sector bring online enough EVs that it will seriously dent Tesla's market share?
I don't think they're gonna catch up.
So good to hear from a Wall Street stock analyst covering Tesla who actually gets it and will say it out loud. Now, I know this may come across as obnoxious and arrogant, deal with it, but I think there's a very clear and reliable tell when you hear somebody discussing Tesla. Are they at all credible in what they are saying? If they genuinely believe that Tesla has credible competition today, or that this supposedly credible competition will arrive, you are hearing from somebody who is tacitly admitting they have absolutely no idea what they're talking about, at least on Tesla, and therefore this opinion is ill-informed at best and intellectual excrement at its worst. The fact that Colin has stated clearly that he doesn't believe Tesla's competition will ever catch up, in other words, Tesla's lead is unassailable, is evidence that Colin really understands what's happening here. By the way, I am serious. It's a real easy tell. You hear somebody say, what about Tesla's competition? The competition's coming, and they're serious, they mean it. They don't know what they're talking about. Don't even bother listening. Unless, of course, to understand what people who don't understand Tesla are thinking or not thinking.
At this point, what we've seen the company do is design vehicles for production that are far more efficient, but also evolve the powertrain. And this has been a core part of our argument, is around the chemistry within the batteries.
And so I think you're going to continue to see, volatility in this name and a lot of different opinions.
Volatile? Tesla stock? Got to be kidding me, right? It's not like it was that company that lost $100 billion. You guys hear about that the other day? This company lost $100 billion in market cap in a single day. Same company a couple of weeks ago, maybe a month or so ago, put on over $100 billion in a single day. I mean, that's crazy volatility. Not Tesla stock. Oh, wait, that was Tesla stock.
You look at the headline from this quarter, it's really Austin has started to build cars, and you look at 4680 as a battery technology. I mean, that to me is sort of the linchpin to the next stage of the Tesla story. Supply chain are still transitory issues, whether it's 6, 9, 12 months. The demand story for EVs is hitting the next stage, and I think Tesla further flexing its muscles.
Dan, what about the fact that they won't be introducing any new vehicles this year? Does that matter?
No, that does not. I mean, we never viewed Cybertruck that was going to be 2022. That was always going to be 2023. And also, the last thing you want Tesla to do right now is juggle so many balls in the air. You want them to focus on Model Y, the ramp in Berlin, the ramp in Austin, the 4680 battery technology. That's something I put an asterisk around. It's a huge part of the moat. And then you look at deliveries and profitability. I mean, this company is going to do north of $10 earnings this year, and then potentially 25 to 30 in the next 3 years. That's the difference right now with this Tesla story.
Now, I appreciate the perspective of Dan Ives here, but I got to say, this guy is going to look like the biggest Tesla bear in a few years' time. The numbers he quoted, earnings per share over the next few years, are less than those in my bear case, which I'm saying 5% probability. Everything that can go wrong does go wrong. And quick reminder, these numbers coming from my Tesla valuation model, available on Patreon, Card in Corner, or link in pinned comment at the investor support level and above.
And also, you look at full self-driving, 60,000 beta customers. That's important in terms of the next leg of the story.
Taking a step back, I think important context is Tesla is growing deliveries at 5x faster than the overall auto industry. Their profitability on a gross margin per vehicle basis is more than 4x greater than the auto industry, a 5 and a 4x. There's a sense of deja vu in the conversation. It seems like every quarter we hear about Tesla beating numbers, margins going up. And I think it begs a question, what's going to change going forward? And I just kind of want to jump to that when I think about the context of the quarter. The profitability piece, and this is critical because for Tesla to have an outsized market cap relative to deliveries from the other car makers, they need to have outsized profitability. But I think that profitability piece is still underappreciated about what they're building. And I would just put this last piece in here, is that the numbers were good. They were actually better than at first glance. They were probably even better than as you normalize some of the numbers for one-time effects like CEO compensation. The numbers were probably better because you can look at things like FSD and some of the revenue. Despite all of its controversy, they're recognizing very little piece of that. That's something the other car makers don't have that will be accretive to margin long term. Elon came out at the top of the call in attack mode. He's like a prize fighter swinging. He gave guidance for 2022 unit growth comfortably above was the language he used, 50%. The street's at 40%. He also said to expect full self-driving by the end of 2022. This, not making this up. I think that the street may not believe that. But what he did add was that business has nutty, in his words, profitability. The furthest thing from my mind was the robot. I wasn't sure if it was real or a punchline. And in fact, they're really going for this. I think what we're seeing, I think the long-term vision is building robots that can be used in the real world for jobs that people don't want to do. And I think those three, the combination, leaves investors with some greater confidence that this company is just going to continue to grow.
Do you want the company to be building robots before they introduce a new vehicle model? Or, is there supply chain issues around the world and trying to ramp up factories? I mean, is that something you want to see the company do?
If you believe in robots, I think that they do play an important role long-term in humanity. And so I welcome that development at the cost of potentially, putting out more cars. And the reason is that the growth is still impressive. I mean, these are huge numbers, and they're talking about huge numbers on top of huge numbers. So it's not like anything is suffering on the delivery front while they do these other projects.
Loads of interesting points here from Gene Munster. Tesla's phenomenal rate of growth versus the wider automotive industry. Their profitability more than 4 times higher than the auto industry average. I mean, let that one sink in. Munster also pointed out that he doesn't believe people are really understanding Tesla's future profitability, noting that Tesla produced introducing the bot massively expands their future opportunities, allowing the company to continue growing at a phenomenal rate. And with the Tesla bot, we're talking about huge numbers on top of huge numbers.
We know that Wall Street can be short-sighted when it comes to Tesla, and Elon Musk introduces all of these big themes as he did last night. He talked about self-driving and how that could be the most important source of profitability for Tesla. Are you modeling that into your notes, into your price target?
So we are modeling the opportunity for full self-driving subscription revenues. We think that's a very compelling part of the story. I think where we're more skeptical is the ability to move towards higher levels of autonomy, level 4+, and eventually commercial robo-taxi service. Obviously, there's some very big numbers associated with that opportunity. For now, we're skeptical on his ability to launch that anytime in the foreseeable future.
I'm definitely not as skeptical about Tesla's ability to launch a robo-taxi network. I am skeptical on the timing. I'm personally modeling the very first robo-taxi fares anywhere on Earth to occur in 2024 in a Tesla vehicle. My estimates, of course, available exclusively in my Tesla valuation model on Patreon. Check the card or the link in the pinned comment if you're not already signed up. That's for members at the investor support level and above. Point is, in Elon's mind, we're maybe 12 or so months away, and in my mind, we're a couple of years away. But in either case, I think this happens, and I think this happens a lot sooner than most people are expecting, except Elon.
So it seems like a real shift in the maturation of the company here. It's maturing. But this lack of product this year is really weird, Joe. It's a good point. We estimate there's going to be 29 other EV models launched in the market. So the market's coming for him. And when we look at market share going forward, he's going to lose a lot of market share. We can get into specific numbers, but we expect he's going to lose about 50 points of market share in the EV market over the next 3 to 4 years.
They're growing revenues, and as they talked about their reason for not releasing new models, it was due to a focus on two other things: full self-driving and the Optimus robot, which they believe is going to help them increase their production and capacity and profitability. Rideshare companies calculate that a fully autonomous robotaxi may be worth $250,000 a year. That, I think, is what Elon was pointing to. If Tesla can extract that kind of value, that completely changes the economics of the car business.
The reality is that they're executing incredibly well along all of the key elements of the strategy, in our view. Importantly, their battery production on the 4680, which we think is a step function both in terms of cost and performance on the powertrain, is up and getting produced in Austin, going into packs. They're growing their beta version of the FSD. They're at 60,000 users, up from a couple thousand, quarter over quarter. And we think that's just accelerating their learning cycles around autonomy, which is a critical driver for the shares over the next 1 to 2 years in our view. And then when we look at autonomy, there's really no comparison between Tesla's vehicles on the road, which are approaching 2 million vehicles collecting data on a daily basis, versus anybody else, which are still in the single-digit thousands in terms of any other program that's out there going through learning cycles with vehicles on the road. And so I think what we want to see from them is just ongoing introduction of these software upgrades to really continue the learning, particularly in urban areas where they can really, we think, differentiate themselves from the pack. And we think they're in a place where their cadence is just so much faster than everyone else that there's really just a meaningful opportunity for them to just continue to extend their lead on this. At this point, we continue to see just an enormous amount of demand, both in North America and Europe, as well as in China for EVs, and it's certainly nowhere close to being saturated. So we see, a solid 5 to 7 year growth path for Tesla to just continue taking market share, continuing to extend their lead from a technology perspective relative to their auto peers.
A lot of great points there. Totally agree. Colin really gets it. One thing that I want to note toward the end there, Colin describing Tesla continuing to extend their lead. He's not talking about maintaining. Colin recognizes Tesla's pace of innovation. They are accelerating. In the same span of time that companies attempt to catch up to Tesla over 1 year, Tesla is going to get more than 1 year ahead. When I use terms like unassailable lead, I'm careful with my words. I mean what I say. The
form factor with the robot is interesting. I think they're very early. Obviously, Elon likes to talk about things early in the cycle, and so there's a lot of work to do here. But it's, the company is really built on engineering and innovation, and the learning that they've done in and around cars really has applicability in other areas. And it's interesting to see them move into that form factor. We're certainly not giving them any credit or any value around that robot. And I think, to be honest, there was probably some disappointment from certain investors that they were talking about it just as a potential potential distraction for the organization around their core business. But it's important technology. We think it's going to become a bigger and bigger issue as we get into the back half of the decade, and we'll see what they come up with.
More great points. And on the Tesla bot specifically, previously codenamed the Optimus bot, seems like this name is sticking. Time will tell if this is the final product name. Kind of feels weird to use the word product to describe the Tesla robot, It's like, anyway, we'll go down that rabbit hole another time. Colin expecting an impact from the Tesla bot in the back half of this decade. Completely agree, on the same page. My model, first Tesla bot sales to customers and or the first useful Tesla bots being produced internally for use at Tesla, 2025. I hope Tesla can beat my expectations, but I won't be holding my breath. In either case though, over the longer term, and I mean 2030s, 2040s, 2050s and beyond, the implications of Tesla bot are staggering. More about Tesla bot in a moment.
I really kind of want to urge people to listen to his call, because he's a lot more thoughtful on these conference calls than he was at one point, just because he used to have so much fun. But I mean, he's really just talking about, look, I want to produce the most cars possible. In order to do that, I can't introduce new cars that will make it so that, or trucks that'll make it so that they can't produce as much as they want. And that the real focus is self-driving, and stop worrying about these other things. We'll be able to figure it out. One of the things that I absolutely love is that he has a narrative now. It's kind of like Andy Grove in the old days when he was on Intel. Yeah. Here's the narrative. And if you want to deviate from the narrative, I'm not really interested in talking to you. You caught that one moment when Tony Sacconaghi asked a question from Bernstein.
Oh, your favorite analyst.
Yeah, and he basically just says, look, that's, are you listening? That's not what I'm talking about.
Mr. Musk doesn't suffer fools gladly.
No,
never has. Never
but
has.
Don't you like that?
Well, yeah, you can have that kind of an attitude when you have the kind of success that he's been able to have.
Well, he's the only one that has that level of success. He's a remarkable man. He's remarkable.
Positive note to end there from Jim Cramer, accurately describing Elon Musk as remarkable. Can't argue with that. Overall, a very mixed response to Tesla's earnings results and the call itself. I've only shown a few select clips here. A lot of the moronic things just hurt my brain too much to even show them in this video, so this is a little bit biased toward people who actually understand what they saw, for the most part. I shared a few thoughts on Twitter earlier today about the overall reaction to Tesla's earnings results and the comments made on the call. So keeping in mind I didn't bother showing most of the boneheaded reactions to Tesla's earnings in the media and from analysts, here's what I wrote on Twitter. Media and most analyst reactions to Tesla earnings call are hilarious. In a nutshell, Elon promised a big product update, so we were pumped. But all that he said on the call were Tesla were prioritizing the bot, and FSD will probably be solved this year. As I said, these poor sods live in a windowless box. They can't even see or imagine what might be outside. Full self-driving is worth trillions, one of the biggest disruptions in history. And the Tesla bot will merely scale the global economy by orders of magnitude while solving artificial general intelligence. I think the issue is Tesla's ideas are too big for small minds and or minds living in a self-imposed prison. If it's outside the box, it doesn't exist. How to miss Tesla's next 10 to 50x. In the box thinking and projecting one's own shortcomings, one's own limitations onto others. There was a very interesting reply from Elon Musk, quote, given how insanely hard FSD is, and Elon would know, Tesla furthest along in developing this, they're the company that knows just how fucking hard it really is. I think it may take 5 years or more before any company besides Tesla solves it. So Elon is extremely confident not only that Tesla is in pole position, that they're at least half a decade ahead of everyone else. Throughout the call, Elon Musk was banging the drum repeatedly on FSD, autonomy, on robotaxis, the nutty numbers. Elon's extremely confident about this. Tesla is on the cusp of having solved this issue. And the truth is, it's not about the timing of when Tesla solves the problem. It's about how far ahead is Tesla. And here's why. It comes down to safety. As I wrote, at some point, most competition will realize Tesla's lead is unassailable and just license FSD, in my opinion. And the reasoning, very simple. After all, when Tesla has data showing FSD is 2 times, then 5 times, then 10 times safer than a human driver, and second place isn't even at human level, is licensing full self-driving from Tesla really a choice or an obligation? Over 1 million people die on roads every single year. 10+ million people severely injured and or permanently disabled. The amount of suffering and pain is mind-boggling. If a company is attempting to catch up to Tesla with their autonomous software, if they have the self-awareness to understand they will never catch Tesla, Tesla's moving too fast, they've got an unassailable data lead, they will know, and there will be data to show their autonomous software, even if eventually it becomes better than human, then 10 times better than human, will never be as safe as Tesla's software because they have this data flywheel underway. The question is, as one of these companies, do you want to license Tesla's superior, safer, aka less people dying and or being permanently injured or disabled in your vehicles because you license the software? Or do you want to offer the inferior, far less safe software to customers knowing more people will die, more people will be injured, more people will be permanently disabled and have blood on your hands? I really don't see this playing out any other way. Long story short, in the future, I personally believe a substantial portion of Tesla's revenue and profits will come in the form of licensing their FSD technology and, yes, even over the long term, their AGI. Many analysts are a little bit concerned about a lack of information on Cybertruck and the $25,000 Tesla currently on ice, but those who actually listen, understand, and can really imagine the implications of what's discussed currently busting nuts left, right, and center. After all, it may be the case that the global economy doesn't have a limitation. And if that's the case, and you can scale the global economy by, wait for it, creating intelligent humanoid robots, things get financially nutty, to say the least. Something to think about. And based on the new information and the things discussed on Tesla's earnings call, I'm making updates to my Tesla valuation model, including my assumptions around bot, AGI, full self-driving revenue, and more. A few tweaks around the edges, but some of these will have a very substantial impact on my model. So if you're interested and you don't already have access, head over to Patreon with the card in the corner or the link in the pinned comment. You can access my Tesla valuation model. You can see all the assumptions, all of the numbers, bot sales, profit margins, monthly AGI subscription, and plenty more. And stay tuned, I'll soon be sharing another video with my final thoughts from Tesla's earnings call, all the most important points and the implications. There's so much stuff to discuss. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.